What if we apply the legendary Benjamin Graham's investment principles to analyze the stock performance of Meta Platforms? Ready? Let's do it. Adequate size of the enterprise. Graham preferred to invest in large companies with a strong presence in their industries. Meta Platforms, with a market cap of $1.22 trillion, certainly qualifies. Meta Platforms has a market cap or net worth of $1.22 trillion as of February 2, 2024. Its market cap has increased by 212.53% in 1 year. Earnings stability. Graham wanted to see a history of stable earnings growth. Meta Platforms had annual revenue of $134.9 billion with 15.69% growth. Revenue in the quarter ending December 31, 2023 was $40.11 billion with 24.7% year-over-year growth. Meta Platforms has had consistent revenue and net income growth over the past decade, although there was a slight revenue decline of -1.12% in 2022 compared to 2021. Dividend record. Graham valued a consistent dividend record. Meta Platforms pays a dividend, which has remained constant, indicating a commitment to returning value to shareholders. Meta Platforms has an annual dividend of $2 per share, with a forward yield of 0.42%. The dividend is paid every 3 months and the next ex-dividend date is February 21, 2024. Earnings growth. Graham sought companies with a minimum increase of at least 1/3 in per-share earnings in the past 10 years using 3-year averages at the beginning and end. Meta Platforms has significantly increased its EPS from 62 cents in 2013 to $14.87 in 2023, which is well above Graham's threshold. Moderate price-to-earnings ratio. Graham generally looked for a PE ratio less than 15. Meta Platforms has a PE ratio of 31.94, which is higher than Graham's typical benchmark. The price-to-earnings ratio is a valuation metric that shows how expensive a stock is relative to earnings. Moderate price-to-book ratio. Graham preferred a PB ratio less than 1.5. Meta Platforms' PB ratio stands at 7.97, which is higher than Graham would traditionally invest in. The price-to-book ratio measures a stock's price relative to book value. Book value is also called shareholders' equity. Conservative valuation. Graham looked for a conservative valuation in stocks. The price-earnings-to-growth PEG ratio is calculated by dividing a company's PE ratio by its expected earnings growth next year. Meta Platforms' PEG ratio of 0.89 is below 1, which Graham might consider favorable, suggesting that the stock may not be overvalued relative to its growth rate. In conclusion, Meta Platforms exhibits several characteristics that Graham might find appealing, such as strong financial health, consistent earnings growth, and a sound dividend record. However, the company's high PE and PB ratios would likely be viewed as negatives from a strict Graham perspective. Therefore, while Meta Platforms may not fit the classic value stock profile that Graham advocated, its strong financials and growth trajectory could still make it an attractive investment for those who consider a broader interpretation of Graham's principles, particularly given its reasonable PEG ratio.